The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. The U.S. dollar has long reigned as the world's dominant currency, central to global trade, investment, and reserve holdings. But now that dominance is being increasingly questioned. With the greenback off to one of its worst starts in years and geopolitical shifts accelerating, investors and policymakers alike are rethinking currency risk, value, and influence. From rising interest in the Chinese yuan to a broader exploration of alternative currencies, the FX landscape is undergoing quiet but significant change. So what's really driving this reassessment of the dollar, and what other alternatives are investors looking into? Well, to find out more on how investors are recalibrating their strategies in the face of growing dollar doubts, joining me now is Peter Chia, who's a senior FX strategist at UOB. Peter, welcome to the show.
Yeah, hi, Hongbin. Hi, everyone.
Thank you so much for joining us. Well, Peter, some analysts say the dollar is likely to extend its worst start to a year as foreign investors boost their currency hedges. Where does the U.S. dollar stand now, and do you see the weakness in the dollar continuing?
Currently, the U.S. dollar index, which is an index measuring the performance of U.S. dollar against the six major currencies, is trading at around 97. This is the lowest level since 2022. So this is like a 3-year low. And from the start of the year, we started the year at about 108. So we are easily down about 10% since the start of the year. And the year is not even up yet. So definitely the dollar is not as strong as before. I think rightfully investors are asking some questions about the dollar.
Right. I mean, what factors then could lead to the U.S. dollar to continue to weaken, and how low could the dollar go at this point?
Yeah, I think if we look back in the last couple of months, there are a couple of factors that caused the dollar to weaken by such a big extent. Of course, one of them is still about that of the Fed cutting interest rates in the second half of the year. At UOB, we are looking at about 3 more rate cuts by the Fed this year. So that will bring dollar interest rate lower. So typically when your interest rate goes down, the appeal for the currency naturally will be lesser. The second and more important factor that is weighing on the dollar right now is this uncertainty around President Trump's policy. So in a way, some of the policies, especially on the trade, can be fairly radical and erratic. So I think to manage some of the uncertainties around the policy, some of the investors are starting to hedge their dollar exposure. So to hedge the dollar exposure means essentially you potentially enter into a forward market to sell a forward against your existing holdings of US dollar assets. So when a lot of these investors start to do this, it leads to a rapid fall in the dollar, like what we are seeing right now.
So with doubt about where the dollar is going here, how are investors navigating the uncertainty towards the dollar? Are they still holding on to the dollar, or are you seeing more outflows?
For us, we have been bearish US dollar against major currencies since the start of the year. And I think so far the view has been panning out pretty well. Typically, even in a down move, there are also days where it can go up. But nonetheless, I think we are fairly convinced that this downtrend still has some legs to go. So essentially, I think when investors are heavily to the dollar, then I think it makes sense to do some protection around this, or rather diversify to other currencies. They make some sense in this volatile situation. So I think in the near term, we are still looking potentially for investors to do more hedging. And when that happens, I think potentially this could lead to further downtrend or further weakness in the dollar.
Central banks are showing more interest in the Chinese yuan as well as doubts grow about the future of the U.S. dollar. In fact, China is also launching a sweeping campaign to promote the renminbi's global role. What benefits could investors see in the Chinese yuan in comparison to the U.S. dollar then?
Yeah, I think one key advantage of the Chinese yuan, you don't need to look so far. If we look at the Chinese yuan versus the Sing dollar, it's trading at a very low level and a very attractive level of like 5.3 to 5.4 per Sing dollar. So that is something that, we are always benchmarking at around 5, so 5.3, 5.4, or even 5.5 can be quite attractive to local investors. So valuation-wise, it looks fairly attractive. And I think if you look at it, the volatility of this currency, it is also comparatively less volatile to the dollar on average the swings on this currency is typically less because PBOC, which is the Central Bank of China, they also have mechanism to reduce volatility because they have a fixing rate every day, and the currency can only move plus and minus 2% from the fixing rate. To a certain extent, some investors who are less risk adverse, once they have to see their portfolio swing lesser, may consider Chinese yuan alternatives.
Is this a signal for investors then to consider increasing their exposure to the Chinese yuan, Peter?
Yeah, I think recently there's the Chinese government is also promoting the use of the Chinese yuan as an alternative to the dollar by offering more investment options, like they expand the investment products suite so that investors get more interested about investing in China and China-related assets. So that is one. And also we have seen gradual pickup in interest and also volumes of CNY trading offshore, meaning in Hong Kong and also in Singapore. So there's a gradual uptake. But I think at the end of the day, whether investors should consider to increase their exposure is a matter of the investor's preference for the assets in the first place. So, I mean, there are definitely more investors who are very attuned or familiar to investing in the US markets for the breadth and the depth that they offer. Moving into China, it may take some time for investors to get familiarized with Chinese assets, with Chinese companies that they're investing in. So I think the choice of whether investors should do or increase their exposure depends on what kind of products are they more comfortable to invest in the first place.
So is this shift enough to challenge the greenback's dominance in global reserves, though?
I think right now we are seeing a very glacial move away from the dollar in terms of global reserve. If you look at the latest data, which is month-on-month, despite the weakness of the dollar, you are not really seeing like a total loss of confidence or total shift in terms of away from the dollar. That's not going to happen anytime soon. I think, if anything, like when you talk about global reserve, you're talking about global central banks. Their attitude about the dollar, even if it changes, it's going to take very, very gradual. And I think we also question whether other currencies, even like the euro or gold, or even the Chinese yuan, whether they are deep enough to be considered global reserve currency of choice. So there's a lot of consideration. But in short, I think the dominance of the greenback is here to stay, at least in the near term.
Okay. Well, besides the Chinese yuan then, are there other currencies emerging as credible alternatives to the dollar?
Yes, I think right now, not only like we talk a bit about China and the Chinese yuan, not only the Chinese yuan, the euro or the European Central Bank has been dialing up and telling investors that look at euro as alternative to the dollar. So these are the two currencies that the front runner, or rather they are doing a little bit more roadshow to promote their own currency to investors. And the other one will be like gold. I'll consider it something like a currency also. Clearly a favorite of global investors or global central banks in the past couple of years. And I think this is we've seen a gradual uptick in substituting part of their dollar exposure with gold. These are the couple that is standing out right now.
All right. Well, looking ahead as well, Peter, are there key levels or signals that FX strategists should be watching out for in regards to the dollar?
Yeah, so we are entering a very, very important period in time, at least in the next 1 or 2 weeks. So for next, I think one will look at the non-farm payrolls that's coming out as a very important barometer of the U.S. economy. So if the U.S. economy starts to slow down a little bit more in terms of jobs growth, then that could nudge the Fed to deliver the rate cuts a bit sooner. And that could be another negative factor for the US dollar. So that's one. And on the global tariff war that we sort of neglected for a while because we were distracted away by geopolitical developments, right? So that will come into the forefront next week because the 90-day tariff truce that we have will expire on the 8th of July. So it all depends on what Mr. Trump will do next about tariff, whether he will move it back up to the very high levels, or will he extend to allow more trade deals to be coming through? So I think there's a lot of uncertainty around global trade in the next couple of weeks, and it could have an impact on the currency market.
Some great insights there. Well, thank you so much, Peter, for joining me today.
Thank you, everyone. Have a good day ahead.
Have a great day to you as well, Peter. That was Peter Chia, Senior FX Strategist at UOB. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.